Welcome to Bitcoin Escape Plan. As I'm sure you noticed, the price of Bitcoin has been dropping off a cliff. We're going to talk about why in today's video, as well as going over the key levels that we need to watch to see if it's going to go back lower or if there is a possibility of a retest higher moving forward. So as always, I like to start off with the 4-hour chart just so we know what's going to happen in the short term, and then we'll bring that into the longer term historical context of what's going on. And I have a couple special charts today that I'm going to go over, so make sure you watch to the end of the video. You won't want to miss those. Before we get into that, let's go over to bitcoinescapeplan.com. As soon as I'm done recording this video, I'm going to release today's newsletter. That's all these ones where you can get most of these key levels in written form to your email instead of having to listen to me ramble about it for an extended period of time. Then I also go over other key assets like the S&P 500, gold, real estate, etc., and how they relate to Bitcoin. Go check that out. BitcoinEscapePlan.com. You can also get to the Instagram and the threads as well. Back to Bitcoin 4-hour analysis. Also, I just had a thread do 1.8 million views, which is fucking crazy. All right, let's go. 4-hour analysis, Bitcoin, what's going on? So we just had the most significant thing happen in recent memory, which is that we dropped initially to about 75.5. That was late Saturday. And then, or is that early Saturday? That is early Saturday. Had some reclaim in Saturday, continued breaking down into Sunday, and then late Sunday, what is that? 16 o'clock is 4 o'clock? 6 o'clock? I have no idea what time that is. It's evening for me. I don't know where you are in the world, but we broke down further, and this is to 74.5, which is not much higher than 73.8, which is the 2024 peak. We'll go over that a little bit later on in the video. We'll keep it on the 4-hour for now. So what we're looking for essentially is a hold above that point. The pivot points that are showing up is 75.2K. And I believe on the higher time frame on the daily, it's like 76. Oh no, same, pretty much the same. 75.5 there instead of 75.3 on the 4-hour. So that's initially what we're hoping to hold above. And at the moment, we are. At the moment, you can see the actual bottom of the candles is closer to 76.1K. But we have very little that is actually propping us up here. You know, long-term viewers of the channel will know I like to do white for weekly lines, yellow for monthly lines. So these monthly closes are more important. And as you can see, price went right to them. Price went exactly to there before it needed to continue breaking lower after it failed, you know, the key point of control there on the anchored volume profile. That was also the news event that caused that, unfortunately. Hysteria, panic, people going nuts. So we continue to see a breakdown there. We did stop at the monthly levels, and we are now below the lowest weekly levels. So we're actually setting new weekly levels, which I'll go over later in the video. But at the moment, we're showing some strength above that, but again, relative to being below where we would like to be, there are no weekly levels here. We're going to be setting a new weekly level that is lower than these previous ones, and we're still below every single SMA that we have. Every time frame that we have, we're well below it. It's a possibility that we see strength moving into it, and then we're going to have to show strength at the, let's just call that 81K pivot. But the overall structure of the chart is not pretty right now. Like I said, we'll go over that a little bit later. But 4-hour immediately, that's what we're looking for. Is a retest of the SMA, which is currently at 79.5K. Price is currently, as I'm recording this, sitting at 78.7, and we've been having like a bounce from that relative low that we found Sunday evening. Which again, best case scenario is we view that as bullish because it is above 73.8K, but that's like about as close as you can get to a previous all-time high before you see a major breakdown of price. So that's what we're looking for in the short term, is if we can see strength at 79.5, cool. We have a little bit of room for a bounce higher, but all of the time frames above this, we need to be like above 90. So it doesn't matter if we're about to touch 81. That is no no reason to be suddenly not worried about what's going to happen to price in the short term. Not that I think you should be worried. This is healthy for the price to occasionally do this, as I'll go over in a couple of these other charts. Also, apologies if you hear construction while I'm making this video, because there are people doing construction below me. So in the short term, that's what we want to look at. 79.5K is the first major reaction we want to see. We would then want to see strength at about 81. And then really there's nothing going on until we get to, looks like 84, 85 and change, 85, 8, 86. I don't think that those levels are incredibly important. We'll just look at the weekly really quickly before I go over to those other charts briefly. So yeah, right there, 86, I would say is important. We're nowhere near that right now. The SMA is going to continue to get pulled downward. I talk about that in the newsletter as well. I really think that this is just going to put a tremendous amount of pressure on the price where it's not going to be able to rise above that. Before I do that, let's bring in context real quickly, just where we are in the cycle. So this is the power law model. Luke asked me to look at this in the last video. And I think this chart is interesting, but really I like this other power law with the 4-year moving average rather a little bit better. I'll snap to that one in a moment. But the important thing for this chart is the price doesn't really interact with that support where it's like very, very close to it. It might touch it initially. But the other thing that I noticed when I was taking a look at this is every other instance on this chart, we don't necessarily hit resistance or break it. We get pretty close to it. But this most recent instance in 2021, we're nowhere near it. And then where we just were in 2025, we don't even break the linear regression trend. So if anything, I would assume that this power law is going to break to the downside more likely than it is going to continue to hold on the inside of it, or rather above the support. Like if there were an instance where it's likely to show weakness, it would be when we couldn't even get past the regression trend, let alone the resistance level. We were nowhere near the resistance level. The last time we were there was in 2021. So I would interpret this as inherently bearish in the short term, certainly. And it kind of depends on how long they plan to go out on the stablecoin laws. I think they're literally meeting about that right now. I forget what the hell they call it, the Crypto Market Structure Act or something like that. There's a couple different bills that they're going to have to enact in tandem. And as far as I understand, they won't go into effect until 2027. And I just read something where it might even be as late as 2029. So this imaginary liquidity that people think is going to randomly flood into the market off of, like, say that they pass something that's super favorable this week. Or I saw some other news about they're removing capital gains on crypto. That would certainly be a short-term bullish effect, but it doesn't change the fact that we're way below where we would need to be historically in a cycle to continue to show strength rather than a further breakdown of weakness. So if we look at this a little bit closer, I hate these types of charts, dude. Oh my God. Whoever designed these, you're a jerk. So the last time we touched it, this looks like 2023. We got pretty close to it. That might be the end of 2022, early 2023. So we don't necessarily expect. It's currently sitting, looks like at about 52, 53-ish. And again, we've talked about this in multiple videos now where that is likely, that the range that we're expecting to drop down to was like 73 to around 50. So it's not unreasonable to me that at the very least we are going to go to that support line. But again, we didn't even break the regression trend this time. So I would assume that the price is going to have to interpret that bearishly. And I feel like this one actually shows it a little bit better. This is the power law and 4-year moving average. And as you can see here, so the orange, or I guess that's orange, gold. The gold is the 4-year moving average. And as you can see, this actually does flip with the power law support. It doesn't mean that the price does necessarily, but the moving average itself will end up flipping. And I think that we're about to see that now, where the moving average is about to meaningfully flip below the power law support and continue to go lower, which will also pull the price lower. I believe in this instance as well. So this is an instance over here. This is 2012, so hardly relevant to now, where the price at the end of the day actually goes below the 4-year moving average, whereas in most other cases, it might dip initially, but it does not stay there for very long. Oh, never mind. In 2022, 2023, it looks like it stayed below for a while. Let me see if I can see that more clearly. Oh yeah, went all the way down to the power loss support. So I would imagine price is going to break down first to that 4-year moving average, which is right now sitting at 57. And then it would need to touch power loss support at 52. I mean, this is pretty much just telling us what we can already see looking at the closing candles. That's my only issue with like these other charts. It's like they want to make it complicated, and it's not complicated. Like just look at the monthly and weekly closing candles. I'm gonna go over one more chart before I go back to the Bitcoin chart. I love this chart. This is one of my favorite charts, seriously, because I think like sometimes when there's major sell-offs in other assets, all you can think about is I'm losing money. Like my money is going down. And you're tempted to believe the same thing for Bitcoin, but it's not true when you price it in anything that's valuable to you. So I've really been thinking about this a lot lately as I'm like starting to put more energy into making this public brand around Bitcoin, regardless of my own like personal achievements with it or however much I'm able to attain. It doesn't matter. I'm focused on trying to help other people wrap their mind around how they can achieve more of it as well and what it actually does for their lives. And I wouldn't say that I'm someone who says you should never sell it, but I would say you should only sell it when it improves the quality of your life. If it meaningfully improves the quality of your life, then I do think that there is an argument for you to sell it. And quite frankly, it's your property. You can do whatever the fuck you want with it. It's not for me to tell you what you can or cannot do with it. That's the point, It's not a stock or a house or something else that like a bank or somebody else can take it from you. The Bitcoin theoretically is more difficult to take from you, though they will try. That's still the main way that they're filling the Bitcoin reserve right now in the US is by taking it from people. So this is the price of Bitcoin relative to a carton of eggs. So as you can see, initially on the chart, very early on, 2011 is when it starts. It's very expensive. The green one is the price of eggs in Bitcoin. It's very expensive to get eggs with your Bitcoin. And it really isn't until about 2017 is roughly the first time where it approaches the same level to buy it with Bitcoin as it does to buy it with dollars. And you might be thinking to yourself, why would I ever want to buy my eggs with Bitcoin? Why would I want to do that? And this is where I think it's really interesting, where knowing the white paper and understanding the actual purpose of like the peer-to-peer exchange aspect of it, what we've seen now is since that time period in 2017, we saw one more break back above it where it was more expensive to buy it in Bitcoin than it was to buy it in dollars. And then after that, it has been cheaper to buy it in Bitcoin ever since, period. And I believe that trend will continue, where over time it will become cheaper and cheaper in Bitcoin terms to buy eggs, but it'll become more and more expensive in dollar terms to buy eggs because of the inflation. They won't be able to cut the inflation in a meaningful enough way to outpace the growth of Bitcoin itself. So does this mean that you're going to go to your local Kroger or wherever it is that you buy your groceries and use Bitcoin, in order to purchase them? Not necessarily. That is a direction that it's likely going to go because Visa and MasterCard and PayPal and these other companies have become more and more invested in Bitcoin in the future. And that's probably, quite frankly, will be the most convenient way for this to actually take place. But for me, the way that I actually dream of this, I think this would be so cool. If you think about like the 1950s, you had a relationship with your local farm and they would bring you milk. and you would, when you're done with the milk, you would leave the bottles. They would come get the bottles, and then they would bring you fresh milk, and then you would repeat the process over and over. It was a reciprocal relationship, and I don't claim to know how often they were paying. I don't know if monthly subscriptions were a thing back then, but it was a transaction that was based on trust. You trusted that you were going to continue to get your milk from the same source, and that they trusted you that you were going to give them back the part of their product that they needed in order to be able to keep it low cost and to continue to provide it to you at a reasonable price. Currently, they are not incentivized to do that with dollars. They can't. They would be operating at a loss, and no one can operate a massive farm at a loss indefinitely. I guess unless you have a bunch of government subsidies, which is why we're in that circumstance in the first place, because everything is overpriced. So what I think is most interesting specifically about this chart is we could see, and eggs is just an example of it, we could see other services where you're going to do business with them frequently. This is someone that you trust. Why would you transact on a credit card 10, 12 times a year, or considerably more if it's eggs, once a week, once every other week, whatever? You're talking about upwards of 50 plus transactions in a year. Why would you do all of that instead of being able to come to agreement on terms of, I want to buy a year's subscription of eggs in this case, or a year's subscription of being able to get my oil changes with my car or whatever. Bitcoin will allow these providers of services and products to be able to negotiate terms that are favorable to them by extending the time horizon of the deal. Whereas with dollars, you can't do that because it'll continue to cost you more and more and more in dollars. Now, there is someone who gets a better end of this deal. Obviously, if you buy your eggs here, I'm done with this analogy. We'll go back to Bitcoin. Thank you for being patient and entertaining me with that. If you buy your eggs over here, and then the price of Bitcoin recovers magically, you're going to wish that you had that Bitcoin instead of those eggs that you've already eaten, But as we could see on that chart, the general trend was that it's going to continue to get cheaper and cheaper in Bitcoin regardless of where the price is. It doesn't matter. It's already crossed the inflection point where it is more expensive to buy that particular good and product in dollar terms instead of in Bitcoin. It's become cheaper. That will continue to happen over time as they continue to print more and more money. You've got to remember that as of 2011, when that chart began, Bitcoin is still very nascent. It's only 2 years old at that point. It's, I don't remember the exact market cap then, but I would imagine it's in like the sub 100 million or sub 500 million category at that point. Maybe sub a billion. I would have to check that. Let me verify that before I throw out numbers like that. But regardless, the general trend is that other assets are becoming cheaper in terms of how much Bitcoin you have to spend in order to get the asset. Now, the reason why I say it's really focused on trust specifically is you have to like the person that you're doing business with to give them Bitcoin instead of dollars. You have to really like the farmer that's giving you your eggs. You have to really like your auto shop mechanic who's helping you with your oil change. If you don't like those people, continue to pay them in fiat. Who gives a shit? But there will become a time, I believe, where we'll start to see a shift where for transactions that really matter, the same way where like governments and countries will settle in gold a lot of times, and it takes a long time for that settlement. They might make an agreement and they may not actually settle the terms of that agreement in the financial sense of like, this person has it and now this person has it for a period of months, for a long period of time. So Bitcoin allows that to happen much quicker, and it allows it to happen on your terms. No one can prevent you from paying your barber in Bitcoin, from paying your nail salon tech in Bitcoin if you have a really good relationship with them and if you want to see them do business forever. That's the way that I think about it. Never give your Bitcoin to anyone who you don't want to see have it forever. Whether that's you giving it to a relative, giving it to a friend, whatever. You need to accept the possibility that they could continue to hold that for eternity, or they could spend it tomorrow on whatever they want. It's not for you to decide, and I think that that's the beautiful part about Bitcoin. Personally, it's not very common for you to like give somebody a share of a stock. Maybe it's become more common since like the late 2010s, where most brokerages now are no fee instead of, because of companies like Robinhood forcing the larger brokers to do that. But it's not common for you to like, unless you're rich, I guess, for people to like gift you in the form of stock instead of giving you a gift card or cash or whatever, not super common. So Bitcoin itself, that's what you have to remember when we're at these price levels. And I will get into the actual price levels that we need to watch before we see a major breakdown now. That's what you have to remember, is you're not just holding an asset that goes up and down. You are holding an asset that allows you to participate in trustless, borderless, permissionless trade. So you get to dictate the borders, the trust, and the permissions. You get to dictate the terms of the agreement in a way that you don't really get to do with your credit card. When you pay with your credit card, you have to pay back the credit card issuer within 30 days or you're going to incur interest for that fee. You don't have to do that with Bitcoin. You could decide, I'm going to pay my egg vendor now and I get eggs for the rest of the year. And I don't have to pay them again until next year. That's the point. I'm so sorry. We're gonna focus up. So we are below the March and April 2025 lows. Full stop. That's not good. That's not good. That you cannot interpret that as a bullish signal, no matter how you slice it. There's no way to interpret that as bullish. That puts downside pressure on us for sure. And the only thing preventing us from going there is not even 73.8 like I've been saying. That's a wick. So the only thing that's actually preventing us from going lower is 71.2, 71.3, which again is not that much lower than us. And all this really, was a weekly pivot. That's where the 76.2K one was. On a weekly pivot, we don't want to see a break below 76.2K. And we already see on the daily and the 4 hour that it's lower, that we could potentially go. And that's going to be dictated primarily by if we see weakness on the SMA here. If we see another breakdown of that SMA, we're going to go lower to those prices that I said. What is happening at the moment is really just, if I want to think about it in terms of the psychology of the market, what we're testing for is, you can think of this as like the ETF boom, as well as I do think it was probably the last time that the halving is super relevant. That's the only time where the halving, I think, has like actually been a price catalyst. I don't know that it will be a price catalyst from now on. It'll be like further and further removed from the actual day that we see dramatic price movement. Because I believe peak was in March. I think the halving was closer to April. And it looks like the actual peak was very early March. So partially on the news of it, partially just on the inflows of IBIT. But that's pretty much what we're waiting for at the moment. And I'm sure you've seen this in the news about how MicroStrategy essentially just got back to their cost basis of about 76K. So that's going to be one of the big narratives that they're trying to plug now, is like, oh, are they going to have to sell if it goes below their cost basis? Which my understanding is that they don't. They don't have to pay back those loans until 2028. And there's plenty of time for the price to recover between now and 2028. There would have to be like really, really severe trauma in the entire economic system for us to see Bitcoin stay below 76K for another 2 years. I can't believe that. There's no way in my brain that happens. I do believe that we do see lower than 64. I do believe that we see 50, like we talked about before. This right here, that's the bottom of that range, about 55K, 54.8. Top of that range is about 71.2, 71.3. We're going to see the price spend time there. Now, it's difficult to say, and what I think really is happening at the moment is there is a kind of like a magnet being like pushed and pulled on either end of 100K and 73.8K being that prior wick. And again, that's just the wick. So it could actually be 71.3K that we're interpreting as the important one. That's a weekly close. It's going to be more important than a wick anywhere on the chart. But even this guy, this is the November wick down to 80K, even though we did close that way higher at 86.8. As you can see, that was pretty important for us on the daily time frame when we did end up failing that and breaking lower. Where the hell was that price? Where am I looking? Is it there? It's this one. That you can see price just barely closed below that here, and that's pretty much what we're holding on to now, is the narrative of now we're fully below the lowest point of last year. So I'm sure that you saw this circulating in the news towards the end of last year, how Bitcoin is now negative on the 1 year, depending on where they were measuring it from. I'm sure if they were measuring it, in November to November, then that would have been down. Certainly if you went from there to there, but that was the overall narrative. And now they're essentially going to be running the same narrative of now it's below the lows of last year, or they might just be trying to recycle that same narrative, where we may see the bottom of this movement happen by April or March. If that's the case, that's not my opinion. I don't think so. I think we're probably going to see, like I've articulated many times on this channel, I think we're probably going to see a bounce up back towards 96K. But as I said in yesterday's video, I still really think we're going to continue to see this weekly SMA drag down. And this is already, now that we have the weekly close of yesterday, this is already way closer to that SMA, or rather, the SMA is way closer to that pivot point than it was when I made the video yesterday. So that's going to put a dramatic amount of pressure on the price when it does return to the 96K pivot, if it has to break through the SMA as well. And it's going to fail that. It's going to fail that the same way that it did in the past over here. It was a different pivot at this time. We've looked at it a bunch of times in other charts. Where is this? This is 24. Too early. Never mind. This is the one I was looking at. So this is 46. 46 is right about the halfway point of 96, or 48 rather. So it's right about the halfway point, and I think we're going to see the same thing happen. Whereas you can see the SMA breaks down below that pivot point during that time in 2022, and this is late. This is in March. You got to remember we're in the first week of February now, so this is being pulled forward a little bit where we can expect this move to actually occur. This actual move above it to retest it happens in March, but that is still my baseline of what I think is going to happen. Is the SMA is going to continue to get pulled lower. The price eventually will make its way back to it. We'll probably fail another test at it first, and then it'll probably break down again. It'll get above it, everyone will be stoked, and then it'll get right back to that fib pivot and it'll fail. And for us, that's just going to manifest as, if we think about the psychological barriers that we're caught between, is 100K, and we just got to 98K and we failed. And it's not that we got to 98K and we failed, it's that we failed 100K. That's what the narrative is. That's what the broader implication on the chart, the question that the chart is begging to ask is, can it get above 100? And the answer was no. So it's going to be the same case here where we're already seeing it. That SMA is going to continue to get pulled lower and lower until it's below that pivot point. And then even if the price does have a rally from here, which I believe that it will, especially if they come out with bullish news this week for the crypto market structure bill, which I don't give a shit, whatever. I'm focusing on the charts. Even if that occurs and we see another rise higher, it'll have to be through the weekly SMA, which at that point I would imagine is going to drop down to at least here, 93.4-ish. We'll need to see strength through that, and then it'll need to have a positive reaction to 96. And I think at best case scenario, it's going to wick above 96, maybe close slightly above it on one of the weekly candles, and then it's going to fail hard in the opposite direction back down. So I'm not of the opinion, and I'm seeing a lot of people talk about this, I'm not of the opinion that we are about to see 50K right now. I don't think so. I think that they want you to believe that, like the people who benefit most from the price continuing to dump. It makes sense that they would want you to be super fearful right now, but I think it's more likely that we've seen the bottom at the moment. Again, we'll have to know this within the next 2 weeks, essentially. If we can't get a recovery in the opposite direction in the next 2 weeks, then I would expect the breakdown to continue now instead of happening later in March or April. Which it is what it is. At the end of the day, it doesn't really matter. Really, this is the time. I've talked about this many times. Anytime we are below the weekly or the monthly SMA, you should have some strategy for accumulation, period. That's all you should be focused on. You shouldn't be, if you are a very good trader, cool. You can be focused on the daily price movements and trying to profit off of, the random swings. Like some of this, I was well aware was going to happen. I've been talking about the 4-hour anchored VWAP a ton. So I knew from there when we failed that we were going to go lower, and that probably would have been a safe bet to take a short. But you got to remember that we are in the period of time in the market where nothing is certain. We're just now starting to see some banks fail. It's early, so we haven't seen that many happen yet. But that is a trend that will continue to happen over this year. This is in the 4-year cycle, the year of bankruptcies and things like that. It will put stress on the other markets. I'm already seeing, I don't think the MicroStrategy is going to go out of business. I wouldn't be surprised if that BitMine one does, and Tom Lee, because betting on Ethereum is foolish. I don't think that's a good investment. Certainly something that you can make a lot of money with, but he's making it at the expense of other people giving him their money to invest in it, which will break. I said that all last year. I think a lot of the digital treasury companies, digital asset reserve companies, DATs, digital asset treasury companies, I think that's what it is. A lot of those companies are going to go out of business. I don't think MicroStrategy is one of them, but a lot of those companies are going to go out of business. So that's what I think is going to happen now, is they're really just pumping as many bad narratives as they can right now. And there will be something that kind of tweaks it in the opposite direction in the short term that allows us to continue this relief rally. And then they'll completely cut the floor out from us, and it'll seem out of nowhere, but it'll really probably just be a sell the news event on them coming to terms with the market structure bill or something else of that nature. They're even, I'm seeing a bunch of stuff about how Epstein is related to Satoshi, which is dumb, completely ridiculous to even entertain that. Hopefully you don't believe that if you are liking and subscribing to this channel. But there's a possibility that this just completely breaks down here and that we never even see this 96K pivot. There's a possibility that this already was the attempt at that 96K and we just failed it, and we're going to continue to fail it. In 2022, you can see here, so this is in December, we start to initially break down. Slightly later, well, I guess right around the same time, actually, when you look at the weekly instead of the monthly. Typically, I look at this breakdown on the monthly. Oh, no, we did break down way earlier. We broke down in October. So this breakdown has already started earlier for us in this particular instance, and we see a prolonged period of dropping down and consolidation, and it's in March where we actually see that fully stretch out. So that's a long period of time. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks that it takes once it's initially interacted with that Fibonacci pivot before it fully fails it. And it's under the weekly SMA that whole time. We are also under the weekly SMA this whole entire time. My apologies. I'm recording this video on my floor because the lighting it's bad right now with the sun. Okay, that's what we're looking at. Is look how many weeks we have been below this. There's no hope of a recovery at this point. It just does not look good. So this, if we think about it in the same way that it may be a period of 12 weeks from this initial test, that is Monday the 12th of January. We are currently on 4 weeks, which would mean 8 more weeks before we see the full progression of retesting that and then going lower. Which, if that's the case, I don't know that I believe that. I think it's going to happen faster than that personally, because that would put us all the way out over here, that the price would need to chop, and the weekly SMA would either start rounding or continue dropping. And if the price is dropping, the SMA is dropping. So our only hope for that is if the if the price consolidates here for whatever reason, which I don't see why the fuck it would consolidate and show strength right above that 73.8K level. Like, that makes no sense to me. Like, that would assume that a lot of those people bought the top then and have held it this entire time for whatever reason, versus people who realistically their cost basis is lower than that. You know, if we look at the actual cost basis of like the early ETF buyers, then their cost basis is in the 40Ks, not in the 70Ks. You know, so we have to assume that the real like fear in the market is not up at 70, it's lower. You know, and when we reach close to peak fear, I think that's when we can see a true bottom. But there's a real possibility that we don't even see it go to those levels, to as low as, 45. I don't really think so. I mean, me personally, I'm really looking at about 73 to 50, I would say, is like the worth taking a look and worth buying some range. If you think about it just in the long term of the asset, which again, that's what I'm thinking about it, is how many eggs am I going to be able to buy with it in 20 years? You know, how many banks and other issuers of credit am I going to be able to do business with because I have this asset that they want, that they can't get enough of? That's how you got to think about it. It's not just, oh, I have more dollars. It's like, no, you have more of the thing that you need to transact with people in the future, when trust is the primary, thing that you're transacting. So there's very little above this guy. What is that? Yeah, about 70 or 70, 71, 71.2, it looks like. Pretty much nothing between here and there that is actually holding up the price. Like, there are no candles there. This candle that we have here is shot right above it, and these guys don't touch it. So nobody bought it there. Like there's nobody who bought it there that is like going to defend that price, which means it's more likely going to be the people who either bought it at the tops, and they're not going to be super, super likely and willing to fight it necessarily because they bought it at the wrong time. If they had any awareness of when they were buying, which they may have just been dollar cost averaging and they don't give a shit. Again, this is mostly ETF buyers in here. Those people are not going to strongly defend the price. It's down here that we're going to see more strength defending the price, because we have people from all the way in 2021 who also may have been top buyers there, who are really, like the most unfortunate of human beings to buy the top of a prior cycle and to still watch it go below that point. Like that's like somebody who bought in December of 2017 and for whatever reason decided to sell in November of 2022 because they just didn't understand, that sometimes you do have to wait. In that case, that's a full 5 years basically that you have to wait before you're in profit if you buy at the wrong time, which is super important just to keep in context. If you're somebody who was buying in October, especially if you were buying with leverage, you need to be prepared that you may need to wait 5 years before the price is back above that again, which is terrifying to articulate. So that would be 2030 would be the first time that you're actually like guaranteed to be in profit moving forward, period, from now on. It doesn't mean that you won't break above that initially. My understanding is that we would probably have a peak in 2029, and then 2030 would be another bear market year. If we continue to see the 4-year cycle. But that's really where there is a 5-year cycle, is if you're bad at it and if you buy at the top, then yeah, you have to wait 5 years until you're in profit again. But for most of us, that's not the reality. And even if you were to buy now, I don't think you'd have to wait more than 2 years to be in profit forever. Like once we get through this psychological break of basically what happened, and I was talking about this on Threads all year last year, I was calling that out in July, that we were going to break below 100K, even though all the news stations were saying that we were never going to again. For me, that was very simple. It's just the 100K was the most important psychological level. We barely were able to get even close to the next important one, which I would say is 250. So that's going to be interpreted as weakness. and that means we're going to break below it. I didn't know it was going to happen so quickly, but it did happen quickly. And then I really think, and I've said this in other videos as well, I think 2026, the narrative is how low can Bitcoin go? 2027, I think the narrative is can it reclaim 100K? So that's what I would expect to continue seeing a progression of, is periods of consolidation and chop, as well as further breakdowns to see how low can we go. That will take place over the course of 2026, probably quicker now, to be honest. It does seem like it's happening faster than in previous cycles. So we may actually see the bottom. If previously we assumed the bottom would happen by early October, maybe we see it by like June, July, September, or something like that. I don't think that it happens all now. Again, we will know that within the next 2 weeks. If we get a couple closes below this 76.2K pivot, there's just nothing holding us up above 71.2K. There's nothing there. So price will drop below that. And then once it's there, we would need to see, like, really, these people would have to step in with conviction. Those people who like bought the ETF at the wrong time and are now having to decide, am I going to let this go into loss for a period of time? Do I buy more of it? Do I sell it? That's going to create a lot of uncertainty in the market in that little gap there that is going to be painful, quite frankly. And I think in general, where we are right now, it probably trends toward the downside if we touch that at all, unless we show strength here. If we show strength here, cool. Everything else I said is in play. I still believe that we get to the weekly SMA before we get to that 96K pivot, and I would interpret 96K pivot to be very similar to the 48K pivot of the previous cycle, which means the SMA is going to get pulled below it. Even if we break the SMA, we then still have to break the fib pivot. We then will not break the fib pivot because it will form as resistance instead of support. If we were to break it early, if for whatever reason a fucking miracle happened and we just shot right through it, which again, here we're sitting on it. So we really needed that to happen here or here. And it did not happen. All likelihood is that that's going to continue to get pulled lower. It is what it is. There's nothing really else to say about it, So in the short term, we want to see strength at that 76.2K level. Either way, regardless of, so if we dip lower, then we don't even have a clean weekly close level. At least here, the best thing I can say here is, say theoretically, the price just continues to go up for the rest of the week. Say that they come out with fucking awesome news for the crypto market structure bill. Say it's the greatest news that they could possibly have. And for whatever reason, the price just rockets for the rest of the week into the end of the week. And we close somewhere above here. 86.9K, 87K. We get all the way up there. Excellent. Cool. Now we know that this is the bottom and that this is a reliable level for us at 78.8. That's a reliable weekly level for us to remember moving forward. Is 78.8 higher than this guy? Yeah, slightly. It is slightly higher than that one. So I might be looking at the wrong one. Is it 78? No, it's 77. 77 on the nose, it looks like, is where this actual close was. Yeah, 76.9. So either way, that is below the April lows. Period. Full stop. Not a bullish signal. Not something that we want to see if we're hoping for like a true reversal of trend here. So I'm of the opinion that that's not what we're going to see. I still think the SMA is going to continue to get pulled down. I don't know where we interact with it. Anywhere in here looks good. Those levels that we just chopped around at between 91.5 and what is that? 86.9, right around there. I would assume we consolidate and chop up there if we're able to show strength before we get back to another touch. But, I do think gold is going to bounce back. I don't think SPY is done either. I think Bitcoin is the punching bag this year. I think that every time everything else pumps, Bitcoin's going to dump. Everything else dumps, Bitcoin is going to dump. Like I don't think that there's going to be a savior for Bitcoin this year. I know nobody wants to hear that, but I think that that is not even a bad thing. You know, that just means we're going to spend an extended period of time below the weekly and monthly SMA, which again, what does that mean? What does that mean? It means break out your fucking piggy bank. That's the point. That's what you do during those times because you are rewarded when you do that because the price never goes there again once you're patient enough. You know, the price will never go down to 28K ever again. It's not going to happen. I've seen people talk about that it's going to happen. It's not going to happen. Those people are delusional. You know, just like over here, the price was never going to go back to 3,600 again, other than the COVID flash crash. So we would literally need something of an equivalent level. And even there, it didn't do it. It went, so this is a monthly. Let's look at it on a weekly time frame instead. Where are you, 2020? So March of 2020, even in that instance, so the close is at 5,300. The low is 3,800. So there's a big difference between 3,800 and 5,300, you know, and that's just in the course of that week, you know. So I don't expect that we are like I could see an argument where if we say that we touch 50 very soon, say we touch 50 between now and March. Say I'm completely wrong, and instead of seeing that uptick one more time towards the weekly SMA in March, instead we just continue to see a breakdown towards 50. All I think that does is then probably that realistic rebound or reattempt at the SMA will happen closer to June, July. And then same thing is going to happen. We're still going to fail it. And then it's just going to go back down towards that 50K. And maybe 50K acts as support. It's quite possible, you know, based on that power law corridor that we looked at earlier, it was about 52. So it's quite possible that price kind of like has the powerful magnet there where it keeps it away from it. But I don't think so. I think that there's still a big chance that it gets uglier. They're trying to tie the devil himself, Jeffrey Epstein, to Bitcoin. They're not doing that by accident. You know, they're going to try. This is the thing. This is the thing that drives me fucking crazy. Everyone on earth that understands what's going on with Bitcoin is technically disincentivized from telling you to buy more of it instead of hoarding as much of it as they can themselves. The governments, the corporations, these wealthy people, they want you to be distracted. They don't want you to own this thing. This thing will continue to go up forever, even if it slows down. And it will slow down. You know, I don't talk about that much in the videos because it's super long term, probably not until the mid 2030s. But we will probably see a loss of a cycle or two cycles for Bitcoin at some point, the same way that we've seen for gold. It may become more normalized as the price gets way and way higher, and it may not be relevant to anyone who's listening to this video because your cost basis is going to be so low relative to whatever the price is at that time. But it will feel, in context at the time, it'll feel like a massive drop, you know, like something that nobody could withstand. So you really need to just keep that in context that this is something that you're not just buying for what it's going to be worth in a year or two. You're buying it because countries are stockpiling it, because companies are stockpiling it, because wealthy people are trying to devise clever ways to siphon it from you. You know, the government is literally finding ways to get it back from hackers. The one that's so crazy to me is there's like $4 billion worth of crypto that was taken by Chinese hackers, and the U.S. took it from the hackers. And do you think it went back to the fucking people that got hacked? No. The U.S. owns that fucking crypto now, you know? Like, this is going to be something that countries fight wars over in the future. You should not be concerned when it goes down in dollar terms. It doesn't fucking matter. Buy more of it. That's the important point. Period. Like, I don't know how I can be more clear about that. You are buying it because you believe in the long-term value of the asset, not just because of the minor price fluctuations in fiat at the moment, when we are literally dealing with The broader macroeconomic trends are that the dollar is going to continue to devalue. I talked about this in the yen carry trade video. The dollar is going to continue to devalue over time, just like every other fiat currency in the world. And less countries have dollar demand, which means that we have more and more pressure on the dollar in the bond market, which puts even more pressure on stocks and assets like crypto. Everything gets more boring as the dollar gets weaker. So I don't think that that's going to magically change. I do think that Bitcoin is going to continue to just have bad news for most of the year, which is not bad news. It's not bad news. It's good news. That means that you can get it at great prices, and then you just have to be patient. It will not be a period of 5 years from now where 77.2K is in profit. It will not take 5 years. You only have to wait that long when you are buying absolute peaks of the market. And even if you look at it in terms of the 12-month, it's very infrequent. So if you bought it over here, price never went there ever again. If you bought it over here, then you had to wait 1, 2, 3 years before price was above it, and really about 6 years before it was never added again. Technically, depending on where you bought it, if you bought it in the wick, you're a dumbass. If you bought it in the candle, then technically price never went there again after 3 years. Same thing for this guy. So this guy, for whatever reason, if you bought in the wick, you are still in profit now. It just took you 3 years, and you will theoretically still be in profit, but likely there will be a short period of time where it'll cut into it a bit. In this particular instance, this is 46. So actually, I haven't looked at this, but this could be a useful heuristic for us to use that. Actually, you know what? I'm going to do that. I'm going to do that live. Just add that to it because that is a useful line. So this is previous 12-month close, yearly close. I'm going to try and get it exact. Oh shit, what did I do? Oh, it looks like I already have one pretty close to there. Well, so I'll leave that one, but this other guy is already very close to there. I'll set one more here. Nope, not the correct button. Is it Alt-H? Bro, I'm so good at TradingView. Yes, there we go. Okay, so that is 46.2 and 42.1. If we were to assume that would be like the absolute floor, price will not go below those if it holds true to that same logic, where that's the top of those closing candles. And as you can see here, the price closed above the top of those closing candles. It's assuming that we continue the same rough shape, which I can believe. The lowest I've talked about us possibly going is 39K, but it's a post-ETF world. Countries, governments, major corporations are like continuing to amass this asset. So I can believe that. That price is not going to drop below about 46.7K, meaning the actual bottom is probably closer to 49K. I would assume, based on everything else that we've looked at on the weekly and monthly time frames, that looks more likely to me. That is 75. We spend a lot of time in here. That's about 49. And as you can see, this is the important one. That's where we kind of break back out of the trend there. And we minorly dip there. That's 49.5. So yeah, that's where I would realistically, that's anybody who bought, other than the very first people who bought the ETF in like the first 3 months, essentially. There's a couple people who probably topped up then, but most people, their cost bases are more in the middle of here, which is about 54K to about 71.5K. So price is going to spend time there. People are going to defend that. People are not going to want that to go away, but there's just as much money and it's a 24-hour market. So there's nothing preventing them from pushing prices lower. I'm going to call it for this video. I think I've been pretty lucky. I don't even hear that much construction, so you just think I'm a crazy person, which is fine because I sat on my floor to record this whole video. So that's what I would pay attention to in the short term is, do we see a further breakdown below 76.2K? If we do not, then that's good. We get another attempt a little bit higher. Even if we close, say, here, then the start of the next week would probably be back towards here. But I would assume that by the end of this week, barring a massive rip to the upside, I would assume that this SMA is going to be pulled below the 96K pivot by the next closing candle, so Sunday of the end of this week. And then the pressure is down. That's all there is to it. So go subscribe, BitcoinEscapePlan.com. You can get the newsletter form of this video, and I will be back probably on Wednesday. I'm going to try to be back for another video. I've kind of been doing the weekly newsletter, the paid newsletter, either Wednesday or Friday, just kind of when it happens. But I would like to do another. Last week, I really would have preferred to do this type of Bitcoin update, just about Bitcoin, because I know everyone was really worried about it, and it seems kind of like slightly out of touch to do the paid newsletter preview, but hey, man's got to eat. Check out the website, BitcoinEscapePlan.com. I'll see you tomorrow, or not tomorrow. The next time I see you.